Welcome back to Fast Market, everyone. Kevin Hinks back here for our second segment of the show. Let's do a quick market update. The S&P up just over 2%, 94 points. The NASDAQ and the Russell up about 2.9%, and the Dow Jones Industrial Average up about 1.5%. So we're about right where we were, not too much change, a little higher on the middle two. But now let's bring in, for our feature stock of the day, let's bring in the co-founder of LikeFolio.com, Mr. Andy Swan, to the show. Alex Coffey is also here. He's, as you know, the host of Next Gen Investing with Jenny Horn. So, Andy, welcome to the show. Say hi to our old friend Alex Coffey. And Andy, when we think about a stock like GameStop, this was a stock that was, for all intents and purposes, left for dead. They were a brick and mortars video game seller, but they've managed to stay in business and do pretty well and adapt to the new world, and they're causing problems for a lot of short sellers here. Andy, what do you have for us today in GameStop?
Yeah, it was a stock that was left for dead. It was a company that was left for dead. And what's really interesting about this is the way that things kind of got reversed. I think it's one of the first times really in history that we've actually seen, activist investors from the individual retail market. And so Reddit kind of all got together and decided GameStop was a better company than the street had given it credit for. They took on short sellers. They created the enormous short squeeze at the beginning of last year that was so mesmerizing to watch. But beyond just the action in the stock, what that has done is actually created positive momentum for the company itself and for consumer awareness. In fact, we see mention volume of GameStop. So people talking about the company itself, 73% higher than 2019. So it wasn't just a stock play. It wasn't just a short squeeze. It actually was, a bunch of people getting together and saying, let's actually make the world more aware of this company. And the company has benefited greatly from that. You can see it in the share price. I think, it's well beyond a stock story. But the problem with this is, it's got really tough comps. We see purchase intent mentions, for actual in-store purchasing and digital mentions down year over year, which is not good. And a big part of that is just a reduction in the overall enthusiasm that consumers have for console gaming. So it's really not GameStop's fault that things are down. It's really more of an industry-wide problem. Last year was really big for the consoles, and they just don't have that driver of traffic like they used to have. So overall, it's been incredible to watch the resurgence of GameStop, not just the stock, but also the company. But as we look into this earnings call and this season, they're just in a little bit of a tough spot because of overall market conditions. But when you really zoom out, incredible turnaround story that was actually led by the average Reddit activist individual investor with $500 to $50,000 in his account. This wasn't, a coordinated effort anywhere other than online. It's pretty cool to see how a group of people could get together like that and actually turn around not just a stock, but a company.
Yeah, Andy, I completely agree. Kind of the populist element to it has been really, really unique and interesting. It's certainly going to have its own chapter in the financial history books as it kind of rewrote the way we look at things, the GameStop AMC kind of phenomenon of early 2021. My question to you, though, is we can talk about kind of the lifeboat that's been thrown to this stock and what they've been able to do with that. But nonetheless, the core business was in trouble for a reason, and it's kind of where things are moving away from. We talk about trends all the time with you, Andy. The fact that it's been able to maintain this resurgent stock price to me has been incredible. But now that we look beyond and we're trying to look forward for this company, you talk about the tough comparison numbers. From an indicator trend standpoint that you're following, is the core just number of mentions more predictive in kind of the meme stock world, more so than just kind of purchase intent when the fundamentals kind of got out of whack?
Yeah, it was. I mean, LikeFolio data around the mentions of the cash tag, actually spiked last year in October and November, way before the stock price spiked. So that was extremely interesting. But from a fundamental perspective, And we do see continued, high levels of investor engagement around this stock, and a lot of attention being paid to it. There's a lot of short interest still, so there's always that factor of another short squeeze. But from a fundamental level, I am disappointed to see digital mentions. So people shopping at GameStop digitally, they're up 74% versus 2019 when the company was pretty much dead, but are down 52% year over year. So I think that there is some really big question marks around the sustainability of this movement, and we can blame a lot of that on the lack of console excitement. But at some point, GameStop has to become bigger than what it was, or even what those investors thought it could be. It has to become a much bigger brand to justify the stock price that it's at now. I don't think, from what we're seeing on a fundamental level, it's there. But again, this continues to be a meme stock, and any positive news, could create another significant move higher. So it's definitely not one I would trade without significant risk control in place, like you guys are so good at teaching people how to do.
Yeah, Andy, this stock is expected to lose 52 cents a share in this coming earnings report. They are expected to report $1.19 billion in sales. That would be up 19% year over year. But, and here comes the big but, they've only been up twice after earnings in the last 3 years. One of them was last quarter, and it was only slightly higher. The average move for this name is about 11.8% in terms of moves after earnings. Andy, let's go black and white on this. Is this company hanging in there and adapting, or, a term we use on this show a lot, Andy, are we looking at a long goodbye that's just, it's not time, it's inevitable, but it's not timely in terms of their goodbye?
Well, I actually think it's a mix of the two. So I don't think that there's this really long goodbye. I think this company has sustainability. I think that the transformation that they're capable of making, and that is underway, become more of a digital first company, is a good one, and they have the right people in place to execute that. But does that align with the current share price and investor expectations?
Yes.
Does that best case scenario justify the current stock price? For me, the answer is no, because of what we're seeing in the degradation of our data in terms of number of people talking about shopping at the company year over year. So if you look at it from a 2 years perspective, huge success story. 1 year perspective, not so much. So I think the truth from the stock price or from the market cap of the company lies somewhere very much in the middle between where it was cast out for dead and shouldn't have been, and where it is now.
Andy, kind of building on that, I think you've made it fairly clear that from a risk-reward standpoint, you can't justify betting with this company, although you acknowledge the incredible turnaround and see some sustainability to that. It's just more of a justification of the current valuation. I have a hunch I know the answer to this, but I'm going to ask you this way as well. Is this one that you'd be willing to bet against because of that valuation, or kind of the underlying market dynamics just too great of a risk to make that worth it as well for the everyday investor?
Yeah, I'm going to turn that challenge back around on you guys, because you guys are so good at this. But the way I would want to frame this is, I want to profit if the stock moves down on earnings. That's the way I think it will move. But I want to protect myself against the real possibility of another short squeeze that takes it up 30, 50%, something like that. I don't want that kind of risk. So the way I think about it is, I want a trade where if I lose, I lose. I don't care how much it goes up or how much it goes against me. I don't want that to be a factor in how much I lose. But I do want to profit if it moves lower after earnings and into the next month or two.
Well, Andy, the one thing we can do is take your views and turn them into a trade. Doesn't mean the trade's going to be right, but your views we can represent, both passively and aggressively. We could do it, and that's what I think this show provides its best utility. We can take your views, your idea on what you think GameStop will do, and we'll turn it into an actionable trade. But Andy Swan, thank you so much for coming on. As always, this is an interesting, fascinating presentation on GameStop, a name that's been so much in the news lately. Now, it's got earnings not till tomorrow after the bell, but this is a great presentation and one we all needed to see. Thank you so much for coming on, as always, Andy. All right, that's Andy Swan, co-founder of LikeFolio.com.